Welcome back to Strongman Personal Finance, everybody. We got to talk about PayPal must needs now, because PayPal just had some very interesting earnings. I saw some very interesting things in my perusal of PayPal's earnings release. Now, why am I even talking about this stock? Do I own this stock? No, I don't. Am I going to buy this stock? No, I'm not. If it goes up in a vertical line next year, am I going to care? No, I'm not, because I'm maxing my tax advantage accounts and buying a total market index over my lifetime. But PayPal is a very, 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 very popular stock on YouTube. So, of course, as a finance YouTuber, I'm going to talk about it. So let's go ahead and pull up PayPal mistakes now and see what happened. So a lot of stocks have been going up in vertical lines recently, but that's not the case with PayPal. PayPal is down 3% on the day and down 7% after hours. Is the company about to go bankrupt? No, I don't think it is, but there are some very interesting things going on. Let's pull up the chart, bro. Past month, it's still up 7%. We'll see what happens tomorrow. Past year, it's down 27%, and the past 5 years, it's down 14%. Why is everybody interested in PayPal? Well, here's what happened. During the pandemic, it went up a lot, and then the stock went down. And you clowns, because you think a stock goes down, it must eventually come back up. You kept buying the dip and buying the dip and buying the dip. And I remember this guy named Jeremy Lefebvre, who's an incompetent fraud, a scammer, and a liar. He said PayPal was easy money starting at $200. And then, of course, now it's $73 and dropping fast. But doesn't matter, bro, because you just buy the dip until it goes up. Individual stocks can dip and keep dipping, and they may never come back. Now, with PayPal, I don't know what's going to happen with this company, okay? They've got some great things going for them, but they also have some serious competition issues. That's right. It's a payment processor, and now they're getting into lending money. What? Okay, so let's go ahead and look over their earnings. Second quarter 2023. Thankfully, they have the financial statements on here. That is my go-to, okay? I don't care about this crap that they're trying to put in my face. I want to see the financial statements because there's so much confusion. Like, I'm just reading this. What is going on here, okay? So, total payment volume of $376 billion, growing 11% on a spot and FX neutral basis. Okay, so total payment volume, the amount of money that's transacting on PayPal is going up. How does PayPal make money? When you send something to a seller, or when you buy or sell something, the person that's receiving the money pays a fee. That's right. And if you want to cash the money out really quickly and get an instant deposit to your bank, you got to pay more money. So PayPal makes a good amount of money. They've actually made some money off of me. Okay, it's actually a pretty simple business. I mean, I'm sure there's more to it than that, but overall, people send money to each other. You can buy stuff securely on websites, and you have the security of having PayPal basically behind your back. And PayPal charges a small fee for every transaction. That's how they make money. Net revenues grew 7%. Okay, so they still have revenue growth. GAAP operating income of $1.1 billion, growing 48%. Massive increase in operating income. Why is the stock down, though? It's almost like the market's worried about something. What could it be? GAAP EPS of 0.92 compared to negative 0.29 in Q2 2022. So we're seeing some pretty incredible improvements, okay? Revenue's still going up, and GAAP operating income is at $1.1 billion. Their GAAP operating margin, and remember, GAAP is the accounting profit, okay, not the clown profit. Their GAAP profit margin is 15% operating margin. Let's compare that to prior quarters, okay? Because it's a billion. Oh, it's a big number. It's $1 billion. But we got to actually look and see how that compares. So historically, their operating margins have been, roughly in that range. I mean, nothing crazy going on here. They're still pulling a pretty decent operating margin, okay? And then you have interest and taxes. That's how you get profit margin. But it looks like the average profit margin is between, I don't know, probably 12.5%. So this is maybe slightly higher than average. Not horrible, okay? So Let's look at their historic revenue growth rate. Well, we can see their revenue was growing insanely. Okay, look at 2020. Look how much their revenue freaking grew year over year in 2020. Massive growth rates, right? And now it's come plunging down. It's come plunging down massively. But it's still growing, which is a good thing. I mean, that's pretty impressive, right? It's not growing as fast, but it's still growing. So it's a profitable company with growing revenues. And they're buying back shares, the last I heard. I mean, it's not the worst speculation in the world, but trust me, the market's concerned about something. Operating cash flow of negative 200,000 or $200 million. Negative operating cash flow, interesting. And negative free cash flow of negative $400 billion, which includes a $1.2 billion negative impact from European buy now, pay later loans originated as held for sale, expected to be sold in the H2 2023. So now they're in the loan business. It's like they're trying to drive sales. Interesting. So that's some of the highlights. Okay, look at our revenues up, our operating income's up. Okay, their operating income's up 48% because they probably had a terrible quarter this time last year, but their operating income their margin is roughly in line with where it was before. Now, apparently, I read an article that their non-GAAP operating margin is down. Okay, so that's why the stock sold off. Okay, whatever. I don't care about non-GAAP. So let's go look at the financial statements. Let's see. Okay, June 30th, 2023. Cash down a little bit. Where'd the cash go? Where could you look? Jeremy, what? No. The statement of Mussy. Short-term investments up a little bit. Okay, maybe they park some cash in short-term investments. Receivables are about the same. Loans and interest receivable held for sale. So they're originating loans. They're lending people money, and then they're trying to basically offload the loans onto somebody else that's buying it from them, okay? But now they're getting into the loan business. Loans and interest receivable net. So they're actually keeping a lot of their loans, they're keeping on the books, but they're trying to sell off about $2 billion of loans, okay? You can see they had $7.4 billion of loans receivable. People owed them money, and now they're trying to sell some of them off, okay? Let's see. Funds receivable and company accounts or customer accounts, $33 billion, and prepaid expenses and current assets for a total of $54 billion in current assets. Okay. You compare that to current liabilities of 41. So they're not underwater. Okay. They're not underwater when it comes to current assets versus current liabilities. Long-term investments, no real change in property, plant, equipment, goodwill. So no crazy changes on the balance sheet. The only thing that's really changing, it looks like, is these loans. They're lending money, now they're trying to offload some to get rid of the risk, basically. Which, I mean, if you're a PayPal investor, do you want them to get into the lending business? I probably don't. I wouldn't. It's like, just make money off transactions or figure something else out. Don't lend money to clowns who can't pay now. Like, why would you do that? Oh, I want to buy an Xbox. I need to make 20,000 payments of 1 cent each. Get out of here, you freaking loser. You shouldn't be buying an Xbox, okay? Let's look at equity. Treasury stock. So you can see treasury stock is more negative. That means they're buying back stock. They are buying back stock. As a matter of fact, they spent, they spent $3 billion buying back shares. $3 billion between December 31st, 2022 and June 30th, 2023. Let's see the stunk price. Let's see, year to date. So, okay, they've been buying back stock. I mean, it looks like they've been buying back stock this whole time that it's been trading at this range. So it's better they were buying back stock here than up here. Okay, but I'm sure they were buying back stock up here too. But they've been buying back, I guess, relatively cheap stock. Their stock hasn't been this cheap in 5 years. So I guess that's not the worst thing in the world. Okay. Let's see. Retained earnings is up a little bit. That's from profits. Or sorry, that's paid in capital. Let's see. Retained earnings is up. That's from profits. And accumulated other comprehensive loss, nothing crazy there. All right. Let's look at the income statement. Let's see. So we got revenues up year over year. Transaction expense is also up. Interesting. How much is transaction expense up versus revenue? The transaction expenses is up 16%, and revenue is up 6806, up 7%. So their transaction expense has grown a lot faster than their revenues. Interesting. Transaction and credit losses are down. Okay, that's good. Customer support, they've cut costs there. Sales and marketing, they've cut costs. Tech and development, they're cutting costs everywhere. The only thing that's gone up is their transaction expense, which is very interesting. That's almost like their cost of goods sold because they're mostly transactions. So total operating expenses is up just slightly because of transaction expense, but every freaking expense besides that has gone down. So overall, that's good. You want less expenses and more revenues, which theoretically means more profits. Operating income's up pretty significantly year over year. And let's see, net income, other income. I don't know what this other income is. Income before taxes, tax expense, and net. Okay. So, I mean, they went from unprofitable in this one quarter to profitable. But that 48% operating margin growth, don't think that's going to happen forever. Okay. It was fake email. That was just like from a very bad quarter is what it was. So overall, I mean, I'm not going to knock this company. Like, it's not the worst thing in the world. Okay, they're buying back shares, are profitable, their margins they have decent margins, they're not collapsing. I mean, it's not the worst thing in the world, okay? But would I buy this? No. And we'll talk about why in a second. Now, let's look at their statement of cash flows. So, what's the big change on here? Originations of loan receivable held for sale. That's right. They're getting into the loan business. And that's why their operating cash flow is negative. They are lending out money, lending. Pay me back later, bro. So why they're doing that, I mean, I can imagine maybe they're trying to juice transactions by, lending money. I'm not sure why they're getting into the loan business now. I'm sure there's a reason they're doing it. But their operating cash flow is negative literally because of these loans. That's the only reason. Okay, this company's not like collapsing with negative, horrible cash flows. They're just lending money now, which it could be to juice revenues, like I said. Because if somebody's going to buy on PayPal, if they can get zero or if they can make 20,000 payments of 1 cent, maybe they'll be incentivized to go ahead and buy something, and then PayPal gets a cut of the transaction. So maybe that's what they're doing. I don't know. I don't finance my purchases. I don't know how this crap works. But yeah, that's the only reason their operating cash flow is negative. If this didn't exist, they would have the same operating cash flow as prior year. So, let's see, repayments from proceeds from repayments of loans receivable originally. So the net loan outflow is $1.2 billion. So if we took that out, then they would have actually their operating cash flow would still be down year over year. Interesting. It could be a change in balance sheet accounts. That's what it looks like. Yeah. So, I mean, basically just when you're seeing the negative cash flow, don't freak out. It's basically because of loans. A lot of loan. They're lending a lot of money. Oh, but our revenue's going up. That's what I'd be concerned. I would look more into that. I don't know why they're doing that. But if they're lending money, if they're enticing people to transact on PayPal by giving them loans or, doing something like that, that's a little concerning, Because if you think about PayPal, like it's a payment processor. I mean, there's 100,000 of these things. The only thing that PayPal has going for it is it's like the first guy on the block, kind of like Lefebvre on YouTube. First guy on the block. And, obviously it's profitable. It's time tested. It's secure. It's trusted. But there's also a lot of competition out there. PayPal is not the only game in town. Okay. I'm starting to use Zelle more now. It's faster. Okay, I get my money almost instantly. I don't have to pay any freaking transaction fees. I remember when I worked for a business before, they used Zelle to get paid. I use PayPal to get paid. I pay a freaking cut. Why not just Zelle instead? There's 100,000 different ways to get paid other than freaking PayPal and its associated companies that it owns. So, but yeah, that's very interesting stuff with that lending right there. Okay, let's look at cash flows from investing. So PP&E, they're buying, nothing really crazy going on there. Purchases and originations of loans receivable. That's interesting. So they have it under, okay, this is the held for sale. Okay, that's why it's under operating cash flow. So basically the loans, when they originate the loans, they're treating them as investment activities. But the loans that they've held for sale, so basically they lent money and then now they're trying to offload those loans to somebody else. Those loans are going under the operating section of the statement of cash flows. But the loans that they're actually originating, that they're holding on to, is staying under investing activities. Okay? And they actually have negative, or they have net positive cash flow from loans. Proceeds from repayments of loans receivable, originally classified as held for investment. So, yeah, the vast majority of the loans that they're originating are staying on their books, but they're trying to sell some off, which I would do that too. Like, give out loans and sell it to some other clown. You know, you get the transaction fee and you sell off the loan. Okay, purchases and maturities of investments. Okay, I mean, basically that's it. Let's see, cash flows from financing activities. Let's see, proceeds. Yeah, they ramped up their common stock buybacks, man. 1.5 billion. Woo, baby. Woo! This is for the 3 months ended. For the 6 months ended, they bought almost $3 billion of stock back. That's a lot. Let's see. Funds payable and amounts due to customers. Interesting. So overall, I mean, I don't know what to say about PayPal. I mean, is it the worst investment in the world? No, it's not. Would I rather buy this, a company that has no moat, basically, besides being trusted and being the first guy on the block? Or would I rather buy a total market index fund? I just don't see the risk versus reward being justified here. Now, if this stock goes up in a vertical line in the next couple of months, I don't care. Why would I take the risk in this one company that has a ton of competition when I could just buy an index fund? Could somebody explain that to me? Maybe I'm stupid. I don't know. Let's see. Is there anything else on here? No. That's based. Okay, here we go. Here's some metrics. I got some metrics. Transaction revenues up 3% quarter over quarter. Let's see. Yeah, the vast majority of their revenue is transactions, 90%. And then revenues from other value-added services. What other value are they adding? They're not adding jack, okay? But overall, they've year over year. Yeah, year over year transaction revenues are up 5%. But what is growing a lot quickly is revenues from other value-added services. So that's where most of their revenue growth is coming from. Whatever this value-added service is, I don't know. I don't have the time to research that. You can go do that. But their actual transaction revenues are up 5%. So interesting. Let's see. Revenues by geography. Let's see, bro. Current quarter versus prior year quarter, 9% year over year U.S. revenues. Current quarter versus prior quarter, international, bro, 5%. And yeah, okay. So, I mean, it's not a dying company. Let's see. Active accounts. Oh, look at this. Active accounts are down 1% quarter over quarter. And there's been no growth in active accounts year over year. So there's more money transacting. There's more money going back and forth, right? I mean, there's inflation. I guess things cost more. But their active accounts are flat, like your mom. So, yeah, active accounts are flat, which no growth. Growth by oath! But the number of transactions is up, okay? Yeah. So basically, they're not adding any new customers that are transacting on the platform, but they're making more money from those customers. So let's see. Yeah, transaction expense rates going up a little bit. Obviously, we saw that. Transaction margins have gone down. So their transaction margins are down overall, and they're not growing accounts. So this is something you may want to be concerned about. But it went down a lot, so it must go back up. Non-GAAP versus GAAP, clownish. Waste of my time. Operating cash flow to free cash flow and adjusted free cash flow. Waste of my freaking time. Okay. So that's PayPal. Why it went down? I guess it missed some clownish margin that Wall Street wanted to see. That's basically it. Nothing crazy. All right. You guys buying the dip? Here he is. Let's hear the facts from the number cruncher.
Hey guys, I like to crunch numbers.
It's going to the moon. She's buying the dip. You know why Lefebvre doesn't look at numbers? Because he doesn't know how to count. I'm starting to realize these story investors. You know why people become story investors? Because they don't know how to count. They're stupid. They failed math. If you're bad at math, you become a story investor. Oh, it's going to the moon because it is. And buy the dip. He's falling in love with PayPal like he did with Ted. Oh, it's easy money at $200, and then suddenly his cost basis is only $66. How did that happen? Crazy. Ooh. I went swimming today. My eyes are burning. You bought puts on PayPal. Okay. It's not the worst stock in the world. Jeremy's Patreon's still up. Of course. I mean, at least now he's not buying, like, mega clown stocks. Like, at least there's, like, potential with PayPal. Like, it's not a clown stock, okay? He used to buy freaking clown stocks, dude. Holy crap. He was such an easy target. Oh, my God. What's wrong with PayPal? I don't ask Mr. Why is the market selling off PayPal? They're probably concerned about competitive pressures and no growth in active accounts. Maybe that's it. I mean, they're not growing like they were during the pandemic. So I don't know what's going to happen to this stock. I mean, like, why buy it when I could just buy an index fund? I don't. Like, this to me, it's not worth it. Let's see. Banished. I've always been in the garage. Jeremy's IQ has to be sub 70. Hey, sometimes being dumb as an investor is good. Because the way U.S. stocks work is you just buy them and they go up. That's it. They just go up in vertical lines. So if you're just a moron and you buy hype stocks, you'll be rewarded for it. Vertical line! It's the future, bro! That's U.S. stocks. Let's see. Anyone releasing earnings in a pessimistic market will just get crushed unless they... A lot of companies have been doing pretty well after earnings. I was actually thinking PayPal might like vertical line, but it didn't. PayPal and Intel. PayPal's not finished. I like PayPal better than Intel, I can tell you that. I mean, the only thing that collapsed with PayPal is their account growth, but I mean, they still have growing revenues, and they still are pretty profitable. And they're buying back shares pretty cheap. Like, it's not the worst company in the world. Zombie company, no. I'd be more concerned about their loads. Ooh, scratching my you-know-whats. Paul says buy, I buy. Paul says buy, I buy. The Buffett indicator. Oh my God, it's so high. Why is it so high? Okay, moron. Jeremy will make more profit off PayPal than you will off your whole time investing in VT. Yeah, he was only buying it at 200, but trust me, guys, he's gonna make a fortune off of PayPal. I'm down 48% listening to Paul, but I'm value investing. Why don't you total market invest? How about that? But look at the PE, bro. The PE! Grifters are pumping. Of course they are. God, man. Of course they are. They went up. Retail went up. It went up. Carvana's up again. There was some clownery going on, man. Like, I haven't had a lot of time. I'm not tutoring tonight. I've finally got a freaking break from that. There is some clownery going on in the stock market, man. You people should not be celebrating stocks going up. There is some stupidity going on. All you do is hate on people outperforming you with VT while Jeremy gives market insight. Now this is funny. That's why he has patrons and way more followers, moron. Can you please sign up for Jeremy's? Give Jeremy all of your money. I bet, please. Buy every stock he buys. Sign up for his Patreon. Buy his course. Trust him. Please do it. I'm begging you, okay? I want you to give your money to Lefebvre. I want you to buy the same stocks that he buys. Put $100 since you can show you make more money in the stock than Jeremy when it goes up. I'm actually like, because I'm maxing my 401k, it's a little tight on cash there, boys. Plus, I got kids. It's expensive. Well, holy smokers, this stock is taking on my course. I've seen worse stocks. I'm not going to knock him too hard, but the problem with Jeremy is he was buying it at 200. It's easy money. Because it's like it's relative price. Like, just because a stock falls a lot doesn't mean it can't fall more. People don't understand that. You're conditioned when a stock falls, you just buy the dip because it's going to go back up. That's not how it works with individual stocks. With an index, it'll probably work, especially a total world index. That will eventually work. It doesn't always work with stocks, okay? Strongman, international investments seem more appealing. I mean, who knows what's going to happen? The market's going to go vertical tomorrow because the U.S. got downgraded. I bet if they get downgraded to junk, the stock market will go up in a vertical 50% growth line. That's how U.S. stocks work. They just go up.
When they sleep, we eat. Yeah, bro, buy the dip, bro. Stop loss, bro. What's up, YouTube? Yeah.
Freaking idiot. PayPal seems like a short-term investment. No way it's a long-term play. I mean, I don't see the point in buying it. Like, why take the risk? Let's see. Best thumbnail, I know. PayPal in the 60s seems like a steal. It may be, like, I'm not going to say this is a clown stock, okay? But what I am saying is it's not worth the risk of me buying this stock when I could just put my money in VT. Remember to smash, that's right, smash the like button. I almost forgot to like the video. You better, boy, I'm going to come fly to your house. We're going to have a chat. I'm going to tie you to your bed and do unspeakable things to you if you don't like my video. Paul Gabriel hit a 5-leg count in Fed. I have my value at pay. I remember I did like a quick like clown DCF and it was like $50 maybe. I don't know. Like, I don't know. To me, it's not worth it right now. Disney. Let's see. What are your thoughts on balls? I like them. What grade would you give PayPal at this price? I mean, honestly, I don't know. A lot of the times the market is right, okay? Everybody thinks the market's wrong all the time. Like, stocks dip, so just buy the dip. Sometimes the stock is dipping for a reason, okay? There's a reason PayPal is dipped. I mean, personally, I don't think it's a horrible stock. I'm not going to be like, go buy it! Because, like, why? Did somebody mention Palantir? Yes, that's all we talked about this whole video. I am a member. Good. Sign up again. Pay him double. And I made a way better return. Good for you. Dude, we make fun of you in the group. You hate so much because we are destroying you. It's a bunch of coping losers that lost all their money on tattoo stuff. Oh, yeah, we're beating strong, man, because my year-to-date. Make fun of me all you want. Go ahead. You're giving Jeremy money. You let a moronic gas station manager who can't even add or spell deceive you into giving him money. You are a very special individual. If you are actually giving Jeremy Lefebvre, if that clown has deceived you, you truly are a stupid person. I'm just going to put that out there. You are not a smart individual. If you are paying Jeremy Lefebvre to get access to his group and his knowledge, Nad up 70%. Jeremy called it because he's a commodity. All these freaking stocks are going up. It's like, this is clownery. It's Chris Sane beating the street. Now that is funny. Man, imagine if he was beating the market like year after year after. What if Chris Sane really is a genius and I'm just wrongly making fun of him? Wouldn't that be the most insane thing? That would be Twilight Zone level. Selling VT. Yeah, great idea. It's going to go up, bro. Hey, you missed out on the massive meta rally. I actually did it because it's a VT. I don't care. You know, a lot of stocks are rallying. I don't care. You people really think I have FOMO. I don't. I don't care. I don't focus on massive vertical line returns. That's called gambling. I focus on saving a bunch of money. That's what I do. And I put that money in tax advantage accounts. And guess what? I'm going to be a millionaire one day. That's right. Most of you clowns, especially if you're paying Jeremy, will never be millionaires. I'm locked in. I am a guaranteed millionaire. Guaranteed I'm going to be a millionaire. And I don't have to buy any of these stupid stocks. Let's see. Wow, dude, I traded $20 for thousands of profit this year. Keyword, profit this year so far. Wow, I am a moron like you are. You are a very, very special individual. Let's see. You missed out on Meta and Palantir. Higher returns. You could pick the most clownish stock. Like, okay, I don't know if you're trolling or not. Are you trolling? You could have picked Dogecoin at the low and said it beat VT. It doesn't mean anything. You have to buy it at the low with your entire portfolio. Nobody is buying these stocks at their rock bottom with their whole portfolio. Except for Jeremy, of course, because he's a genius. Your total returns will not touch the total returns of an index investor. You will massively underperform. You are celebrating short-term market fluctuations. That proves to me that you are a clown. I don't care if stocks go up in a year, 2 years, 3 years. I don't care. 30 or 40 years from now, will I hit my retirement goals and will I massively outperform most retail clowns? Because apparently you retail clowns, you think you can beat the market. That's right. The fund managers can't do it. Most hedge funds can't do it. But you, the retail clown, you can beat the market. Yeah. How delusional are you? Really? How delusional are you people? Oh my God, you people are. Ugh. I outperformed Jeremy. That's true. Let's see. I do want to talk about Tupperware. It's such a shit stock. It went up. It outperformed VT. Buy Tupperware. Oh my God. You ever get sick of losing it? It's my masochism. I love underperforming U.S. stocks. That's why I buy a VT. It just feels so good to just get whooped every day. Oh. I love it. It gets me off. All right, guys, that's it. Maybe I'll do Robinhood stock, or maybe I don't even know what I'm going to do. I don't know what to do anymore with my life. Is there a triple? God, I hope not. That'd be a weird thing to triple leverage. All right, guys, talk to you later. Cheers.